When it comes to a whole life insurance policy, have you ever wondered what your broker or agent makes in commissions? It's a question that always comes up. Some individuals ask, and in my opinion, that is perfectly fine. It should be disclosed, actually. That's just my personal feel. But sometimes it's kind of a sensitive subject. So the question, what does my agent or broker make in commissions on a whole life insurance product? Well, we're going to get into exactly that here. So our company focuses on designing policies for maximum cash value from start to finish. We always talk about that, and we have content on commissions, understanding how they work and really how they impact policy performance. And what you'll find to be the case, if your goal is to maximize cash value from start to finish, typically minimizing the commissions as low as whatever insurance company we're looking at, as low as we can possibly drive them, typically results in the strongest cash values for the policyholder. And a way to prove that is by looking at the guarantees. We can always request the guaranteed values to see, okay, does this really give me the strongest cash values? If I want to see the guarantees, to call it properly set my expectations, seeing a worst case scenario to begin. So how commissions work. So if you're wondering, hey, how does my broker or agent get paid here? Two areas I can actually pay money into a policy. We talk about this frequently. I have my base premium, and then I have my paid up additions rider, or PUA rider. Base premium dollars you will find with most traditional whole life insurance products. The first and often first and second year, zero of that shows up in cash value, or a very small percentage. The reason why is with a whole life insurance product, the insurance company is going to overcharge me for the death benefit up front, the actual cost of insurance. There are still costs after the first and second year, but the heavy costs are really upfront, specifically on the base premium. This is why we often educate individuals on how to reduce that. There are occasions where it does make sense to carry a higher base premium depending on the company selection and our personal situation. That's why we like to look at options. But specifically here, this does not show up in cash value right off the bat. So the question is, if I have a traditional whole life insurance policy with zero in the beginning, that means it was set up in a manner with everything going towards premium. So the first year, commission rates will range between 50 and 135%. That is a huge range. What's going to determine that range? A couple things. One is the insurance agent's production level. Are they with companies that pay a high commission rate? Some companies make you work your way up. They want to see that you bring business to them, and some just start you automatically at the highest level. Another thing that's kind of a technical detail is the insurance company that you are selecting or the insurance agent offering right in the state of New York? If so, New York does regulate commissions in all states. For example, if company A offers life insurance in New York, they have to abide by those commission rates in all states across the country. So if it is a New York company or a company that sells life insurance in New York, typically the highest, the max rate you'll see, a little over 90%. If they do not write in the state of New York, then typically you'll see it get up to 135%. Some small carriers that may focus more on final expense and such, a final expense life insurance, could sometimes go up to 140%. That's the highest I've ever seen it. So typically 50 to 135%. If we just want to call it this, to pick something close to the middle, we can do that, no problem at all. So let's say 90% the first year on the base premium. So focusing on the base premium here, I've got 90% year one. Years 2 through 10, there are renewal commissions, much less than what the initial commission is. Typically 5% is the average. All companies have a different way of paying renewals. Some just pay a level 5%. Some will pay a 10% renewal in the early years, then drop it down to 3%. Typically, it averages out to about 5% years 2 through 10. And then from year 11 onward, they'll be anywhere, from 0 to 2%. Some companies will pay a small renewal. They will refer to it as a service fee after the 10th policy year. If the policyholder continues to make premium payments and the agent has been loyal or has a good relationship with the company, they could very well continue to pay a renewal commission, but it will be reduced. So that is the base premium component. Now remember, high upfront commission, low cash value upfront in the first and second year with the premium piece. Then we've got the PUA component. So PUA dollars in respect to your cash value, typically we see them in cash value immediately. Now the term PUA stands for paid up additions. It does buy us paid up additional death benefit. However, when I make a payment here, if it's $10,000, I'm going to see anywhere from $9,700 to $10,000 in cash value immediately. It depends if the company has a PUA load or not. Some don't have any loads, but most do. But this does accelerate the cash value. This is what we'll always educate on how to maximize the cash value of a policy. Now, how it works in terms of commission is typically like this. And the rate will depend on the company. But each time a PUA payment is made, that percentage, the company will pay a commission to the agent. What I will add, that's on all years. So if PUA deposits are made, a commission is generated to be paid to the agent. Another follow-up question here, what does the broker or agent make? Okay, here's how commissions work. Went into a little bit of detail there. This way we've got a thorough answer. And then two, do commissions at all affect my policy performance? Meaning, if I did not work with a life insurance agent and I knew exactly how to set up a policy, or let's say we designed a policy for you and say, hey guys, see you later, I'm going to go direct to the company and purchase this policy. Can this not be factored in and it all show up in cash value? The answer is no. If I take a perfectly designed policy direct to an insurance company, they will refer you to an agent. They have it set up in a manner where the insurance carrier call it a haircut. They pay a commission to an agent or broker for bringing them that business that they otherwise would not have had. So working with an agent does not impact the cash value performance of a life insurance policy. The policy design is ultimately what is going to impact the performance on cash value and death benefit, and also the compensation. Quick example, because it's always good to have some visuals. Here is a policy on the left that is designed with a particular insurance company with a minimal commission upfront and long term. $50,000 goes in right off the bat, and they've got just about $44,000 in cash value. Compared to one with a higher premium, so the one on the left had a $5,000 premium, the one on the right had a $12,500 premium. You can see the difference in cash value, about $44,000 on the minimum commission product and about $38,000 on the higher commission product. Same company, same individual, same age. Total commission on the far right, about double on this example. So as a result of having less cash value in the product, the agent does make more. And again, it's not to say this one's always bad, depends on our situation, but this is the kind of stuff we'd like to see up front. We've got our renewal commissions as time passes, and this individual paid in for 30 years, and we've got it highlighted. We see the cash value, minimum commission product had more cash value from start to finish, higher death benefit too by the end of that 30-year period, and the compensation totals were much less in the minimum commission product. Now every company again is different, so it depends on exactly what we're looking for from a flexibility standpoint, but asking for this information is perfectly fine. I mean, as a policy holder, it's your money going into the product, not the agent's, right? So in my mind, if I'm the consumer, I've got a right to know, okay, if I pay my money in, if I pay money into this product, I'm buying a life insurance benefit, I'm interested in the cash value, is there a way to improve it? Hey, can I understand the commissions? Just like buying a car. A lot of times I want to know what the compensation is, and I've got zero problem whatsoever with the sales rep making a commission. However, if they're making an extra $5,000 compared to someone else just to make an extra $5,000, not giving a reason for it or just increasing the price because they feel it, that's worth it, Like, all right, yeah, I gotta have a reason there. I just want to know. That's me personally. That's one example. Here's another example. This was a case where someone was shifting $500,000 total into a policy, and he wanted to optimize cash value. And then what was interesting, we looked at, okay, does the policy that generates the most cash value from start to finish result in the least amount of compensation? And the answer was yes. And when we looked at the guarantees, it was even more so a case. So that's where it's good to look at present dividend values, non-guarantees of course, but guarantees I always like looking at in any situation. Take commissions out of the equation, you're just setting expectations properly, in my opinion, because it usually does better than the guarantees, so then things get better and better as we move forward. But no, this was a lot of information for a simple question. What does my broker or agent make in commissions? Depends on where the premium is set. If you have zero in commission, that means, I'm sorry, if you have zero in cash value in the first year or small fraction, that's typically a maximum commission product. But if you have any questions, reach out anytime. If you'd like us to take a look at any policies, reach out anytime. You can email them directly to our info account. And as always, I hope this helps. Thank you so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.